Guys, welcome to Trenches Trading. Today's Monday, October 20th, 2025. Let's dive into my top picks for this week. All right, so real quick, this is the news for the week. Today was Monday. There was nothing big going on tomorrow. Nothing big. Again, the high impact is the red folders, medium impact orange, low impact yellow. I'm specifically looking at USD and looking for red folders. There's some medium impact here. Existing home sales. Let's read what this is about. Annualized number of residential buildings that were sold during the previous month, excluding new construction. So, residential buildings that were sold in the previous month. So that would mean in September. So we're going to find out what the sales of homes looked like in September. Thursday, 10 a.m. And then Friday, okay, so we got the core CPI and CPI numbers. And we also have flash services PMI and flash manufacturing PMI. All right. So we're going to have some volatility for sure on Friday. I mean, the last 2 weeks, if you've been in these markets, then you know it's been super volatile. This past week, the major volatility happened on Thursday, I believe. And then the week before was on Friday. So October's been a wild, wild month. It's like the wild, wild west. All right, so these are the stocks I got on the watch list for today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right. Let's do our thing. So we got A. This is a monthly chart. It's got plenty of space between where the price is currently, this last green candle, and where the 3 ATR is. So the average true range multiplier of 3. Okay. If you're just tuning in for the first time, you happen to find this video. 3 ATR is where price tends to get rejected. All right, we'll see here, rejected, 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 rejected. It rides up the 3 ATR and then rejection. So the 3 ATR is essentially where my one of my top resistance points is. You know, here it gets through the 3 ATR and taps the 5 ATR. That's what this green line is here on my chart. So I got the green line is 5 ATR. The red line is 3 ATR. White line is the 8 exponential moving average. The sky blue one is the 21. And the blue, the dark blue, the royal blue is the 34. Okay. This yellow line down here is just a moving average associated with this volume indicator that shows the average volume over a period of, I think, 20 candles. Yeah, 20 candles. So when price or when volume spikes above this, that's more than a typical volume. All right, so A on the monthly looks pretty good. On the weekly, it's got about $10 here. And on the daily, it doesn't look horrible. But I would want a pullback if I'm going to get involved. Oh, there's a perfect chart right here, 195 minute. So they got some news. So annual decline of sales in the last 2 years, no organic revenue growth during this period, suggesting challenges in its end markets. So they got some bad news today. Yeah. And, you know, that could lead to a pullback coming down into this buy zone. So ideally, I would like to buy in this area when price comes down. ideally between the 21 and 34, so about 139.60 and 137.28. Oh, right here, 137.37, 139.54, right? Those are the exact numbers. I'd like to buy in that range and ride this thing up for a higher high. So A looks good. Let's go to AMGN. Oh, look, this was something that was already charted out. And it worked out beautifully, right? Price came down, tapped the buy zone, and then just sprang up. Boom, boom, boom for 4 consecutive candles or 2 days. Let's see. This is a beautiful move. It says 3 days, 3 hours, $10 move. Amazing. They got earnings coming up November 4th, which could send the price even higher. Again, I'd like to tighten up my resistance over here around 3 ATR and absolutely take profits at 5 ATR. Also, I like to use this tool here, fib retracement tool, to find other potential targets. In this case, 304, 309, 313. Okay. This looks good. AMGN on the daily, on the weekly. And on the monthly. This monthly chart looks really good. I like this a lot. All right, AVGO. AVGO's been on a rampage, ripping up higher from 60 something dollars. Was that like a 500% move? Yeah, 515%. That's beautiful. In just under 1,000 days. So the monthly looks great. The weekly is starting to put in a little pattern of consolidation here. And the daily's got this beautiful pattern, right? Shot up higher, pulled down to the 34, consolidate, consolidate, consolidate. And they got earnings coming up December 11th. So this is a really nice chart. I really like this. They had some news come out. Stock jumped 10% in one day. It's best gain since April. After a new deal with OpenAI. Look at this. So these guys just made a deal with OpenAI. Essentially, Microsoft. I believe Microsoft owns a big chunk of OpenAI. Price is right near the point of control. I would not be surprised if this thing opened up higher. 353 or something like that. But this is one heck of a chart, a setup. They beat earnings last time, December 11th. Let's look at some contracts here for AVGO. December 11th was the date, so these December 19th. Ooh, look at these. These are some nice, tight spreads for a $350 stock. This is amazing. 20-cent spread, 25-cent spread, 25-cent spread. This is awesome. These contracts are lovely. Got a lot of open interest here on the 370 strikes, 11,000, 8,000, or 380s. This one's got 18,000, 330s. So AVGO's got some beautiful contracts, open interest, 60 days away, and it's got a daily setup, right? So this is the most beautiful chart I think I've seen all day. It's clearly on the uptrend, right? Where do we do this? Here we go. Price is going from the bottom left to the top right. That is an uptrend. All right, you don't have to guess anything. Price is going from the bottom left of the screen to the top right of the screen. That is an uptrend, okay? So a beautiful uptrend. Beautiful chart. We got squeezes. We got earnings. We got this good news that came out on AVGO. And today was a great day, right? Pulled right back down here to the 8 EMA near the point of control. Great for an entry. All right, of course, like I said in the last chart, or two charts, right, a good exit will be this 3 ATR, which is 385.02. And if the trading gods so happen to push it up even higher, then the next best exit would be at 5 ATR, $413.37. If I wanted to find some more targets, just in case I decide to buy multiple contracts, bing, I slap on my fib, and I got an exit at 387, 405, 424. Okay, so I'd go with that. What was it? 1219. Yeah, 1219. 360 calls or 350 calls right at the money. If you want to go a little outside the money to save on some premium, these 400 calls might not be too bad. They might not be too bad. So I'm going to write this out. All right, so my buy zone is going to be 336 to 342. Okay. I would stop out under this pattern. Okay. So let me put this pattern in a box. This is the box. Okay. Ideally, price comes down to this area. And this is where I want to make my entry. Okay. So that my risk is defined like that. And then I could just push back up to the top of this resistance or towards the new all-time highs, right? But first target's going to be just at the top of this resistance, essentially risking $1 to make $3. See that 3 risk-reward ratio, okay? So that's the importance of waiting for pullbacks. Statistically speaking, I have a friend who has done some research that says pullbacks don't really matter. My results from me show otherwise. So just depends on the trader. I figured I would mention that. Okay, so stop out under this zone. I would call it about 323. And then we got some contracts. So I'm going to put A for aggressive, M for moderate, C for conservative. So we're going to go with, what is this? 1219, 400 calls for our aggressive contract. 1219, 400 calls. Again, this is going to be in the buy zone. 1219. What was it? 380? Yeah, 380 calls. And then conservative will be the 1219. 350 calls. All right. So from conservative to aggressive, it's about a $2,000 difference. All right. Or $20 in premium. So that's the trade plan for AVGO. Again, your first TP is going to be about 360. TP2 is going to be about 387. And TP3 is going to be about 405. All right. So we got the buy zone, the stop loss, 3 types of contracts: aggressive, moderate, conservative. We got our targets to take profits, And last but not least, let's write down we got earnings on 11, what was it, 6? Let's see, 11/11. Earnings 11/11 in the AM. All right. Oh, it doesn't say AM or PM. Doesn't say AM or PM. Just says 11/11. Boom. That's AVGO. Let's move on. Boot. Oh, I had the beautiful setup here on Boot. Look at that. Price came up. Stop loss was not hit. It's a perfect stop loss. And then, bing, came up here and tapped my take profit, risking 1 to make $7.56. That's beautiful. So, just to go over my stop, you see how this wicked through my stop loss? That is not going to stop me out. The way I use my stop loss is I don't let wicks take me out. I use closes underneath, candle closes. So if this red box was my stop loss, this would have took me out because the candle closed underneath the box. But this, the wick, that would not take me out of the position. All right. So look at that. This was 9/19. This contract expired a month ago. This was a trade from over a month ago. And price has just been in this range, right? Bing, bing. Looks like, according to this, price will likely start to turn around and fall back down. But let's look at the position. It's the monthly. It's the weekly. We saw the daily. 195, 130. So things got no setups really. Let's see the 78. All right, so it's not horrible. What I would like is for a pullback to this 185 area. Let me highlight this. Essentially, this area is the buy zone. All right, so about 182 to 185, and this is a 78-minute chart. So what that means is that it's not gonna, I won't need so much information. I mean, so much time on the position. Like with the last setup in AVGO, went out to December because that's when they had earnings. These guys have earnings the 29th, so 9 days away. And that's a 78-minute squeeze. So that can absolutely fire off in 9 days. Price was up here before, and then it turned around. Price is up here again. So it's something to be aware of. However, there's also this double bottom shape, right? Like a W. Price has to take out this high, 191.31. If price takes out 191.31, this double bottom is officially in place. And price could absolutely shoot up towards $200. Being that earnings is in 9 days, this double bottom has been playing out. It's very likely for $200 to be taken out. Let's see what the earnings, what the news says. 3 reasons to sell Boot and 1 stock to buy instead. So not exactly the most positive news. However, what is this? Since April, just like the rest of the market, this thing has been bumping. How high has it come? 121% in 6 months. So I like this setup, the 78-minute bullish flag here. Right? Price goes up. Does this thing. And essentially, that's the pattern, right? Bull flag. Bull flag, bull flag, bull flag. Let's see what these contracts look like in Boot. They only have monthlies, so not my favorite type of options to trade. And these spreads are pretty bad. Like this stock's not even $200, but it has like a $3 spread, $3 spread. $2 spread. AVGO is a $350 stock, and it had way tighter spreads. So if I was going to choose between these two names, AVGO would be my go-to. So not a fan of boot there, but let's move on. Now this is ETR. So the monthlies right up there against 3 ATR. The weeklies right up there against 3 ATR. And the daily setting up. This is looking like a promising pattern. When do they have earnings? October 29th. So just like boot, it's earnings seasons if you haven't realized just yet. It's earnings season, which means that this is the time when companies are reporting their earnings, and basically the world gets to see how they did over the past quarter. And people use that to determine how the next quarter is going to go. If a company is worth investing into, and essentially just deciding if they want to put their money in. So that's the time we're in here in late October. For ETR, I believe there will be a squeeze on this 195. Yeah, beautiful. Like today was a great day to get in. He had this first opening candle, 9:30. Price opened up, fell all the way into the buy zone. Again, my buy zone is going to be between the 21 and 34 EMA. All right. So about 95 to 96. And price did that today. Perfect buying opportunity here on ATR. I want those 1031 contracts if they have them. Nope. Monthlies. Not a fan of those spreads. So I'm going to just take boot off. I'm going to take ETR off. FTAI. Here we go. Let's look at this monthly. Beautiful. It's got plenty of space between where price is currently and 3 ATR, which I love. Look at this daily candle. $10 move today from the buy zone. Price opened up in the buy zone and shot up to resistance, right? They report earnings on Monday. Buy zone's going to be here, 169, 163 to 169. If this thing pulls back, I would absolutely love to get involved. So we got 163 to 169. Earnings is on Monday. FTAI. Pretty sure they have weeklies. Yep. So I would get these 1031 contracts. These spreads are not favorable. Ew. I would love to trade this. Probably have to do a spread on these. Let's see. It looks like price came right up to resistance. Yeah, look at that. Can't even make this up. Put the fib retracement and look where price came right in between these. This pink and sky blue line. These are my two major resistance points. They're highly compact or close, consolidated. They're really close to each other, right? Only $3 apart here. But basically the pink line is my first resistance. The blue line is my second major resistance level. And price shot right up and paused right in between these two. So could hit this and get rejected tomorrow. Excuse me. Could also wake up and bust right through. And if it does, this next level is definitely where price is going to want to get to. Also, if you look over here on the left, on my VRVP indicator, you'll see this volume shelf that sticks out longer than the rest, lines up perfectly with my sky blue line, showing you that this is where most of the buyers and sellers are positioned, um, above this right huge volume shelf here, which you could see, right, all this action. This next level is essentially the last level before this thing has space to run and probably run to 200. Honestly, I mean, why not? You know, they got earnings coming up. If they kill earnings, I mean, another AI company, chances are this thing's gonna blast off to 200 bucks for sure. Uh, excuse me. Yep, that's FTAI. Ooh, GE. GE's got a lot of stuff going on, right? Monthly, oh my goodness. This thing is monstrous. Forget April. This thing has been running up since. Look at this. This was 2022. This thing is up almost 700% in 3 years. This is beautiful. This is what you want when you buy a stock. You just want to see that bad boy run up and up and up. That's beautiful. Great job, whoever bought the stock and has been holding. All right. Oh, these guys report earnings tomorrow. So this is amazing. Right, price came up here today near the top of this resistance. And they report earnings in the morning. So if they do great, I fully expect this thing to blast off. Excuse me. And at least get to 3 ATR by the end of this quarter. This is a beautiful chart. I mean, this thing has done nothing but trend higher and higher and higher for 3 years. Look at this. So, if I had to guess, I would say this is going to be a good report. It's going to send them even higher. And I would love to catch some gains after they report earnings if they do well. Maybe these 320 or 325 contracts. Look, people bought into these probably with the same idea that they've been killing it for 3 years and they're probably going to kill their earnings. I mean, you can see here, right? And after hours, they're already up about $3. Excuse me. So GE looks beautiful here. Let me see if there's any smaller time frame setups. Look at that one. Yeah, this thing might just have squeezes on every single time frame, honestly. Look at this double bottom here. Whoosh, whoosh, whoosh. This is beautiful. Let's see what a 30 minute. Yep. 15 minute. Yep. 10 minute. Yeah, this thing is prime for a move. It's going to be a beautiful day for GE. Wow. Look at Google this month. And last month. I mean, every month, right? Since April as well. But to stay up here, right? Not give it all back. Google's impressive. That's for sure. Look, they report earnings that Wednesday, the 29th. So I want these October 31st series. And I want to get at least a little bit out the money. Maybe these 265s. 25 cents spread. 257 stock. That's what I'm talking about. Obviously, I'd want to wait for a pullback. So we're going to call that 237, 238 to 246. So buy zone 238, 246. Stop out on a close under 237. So stop out under 237. Take profits 255, 265, 275, right? Just a perfect $10 jump each time. So let's say TP1, 255, TP2, 265, TP3, 275. So we have a take profits, stop loss, what was it, 1029? We saw some contracts. All right, let's move on. MS. I was going to say multiple sclerosis. No, it's Morgan Stanley. Monthly, weekly, daily. Look at this. Daily looks good. Oh, they already reported earnings on the 15th. And they beat earnings. This is beautiful. So this is what I love to see. They beat earnings. They still have a setup here with squeezes. And, that means we have space to run. We have about $10 here on the monthly. On the weekly, another $10 or so. And on the daily, about $9. This thing has squeezes on the daily. And okay, here we go. Little 15-minute squeeze. 10-minute squeeze. Alright. So, being that they killed earnings, they got these squeezes. Again, ideally, you want to get in around 157.70 and 152.12. What was that, 152? Here we go, 152.12 dash 157.87 buy zone. And then I want to start stopping out under 152. Stop out under 152 if MS starts closing. And then take profit levels. First one's going to be up here about 163. And then the all-time high, 166.78. Lovely. Look at that. Price came up today and got rejected off my low rejection line. Okay. So when price gets close to your resistance levels, tighten up that stop loss, use your trail stop, whatever it is. Just don't give back all the gains. Yeah, MS looks good. Let's go to Neem. Okay, NEM. Monthly, fully extended, weekly, extended, plus 3 ATR, and the daily as well. So the daily is the only one that makes somewhat sense, but let's see these shorter time frames. XT. Similar to NEM, right? Price is fully extended up there at the 3 ATR, except for on the daily. I got our first orange dot. Price is here. This is 84.70, 86, 84, 84.70, 86, 84. I need targets. Obviously, you could target this old highs around 93 plus. 93.90 for the high. And then, of course, 96, 99, and then over 100. I'm a big fan for stocks like this close, getting over $100, especially with earnings coming up this Thursday. Let's see what kind of options they got. NXT. No, only monthlies. What about any So NEM has some nice contracts here. Super liquid, right? Tight spreads. This is just the 55 spread. This is a 15-cent spread. This is a 27-cent spread. The hundreds are 11 cents. So NEM looks good. NXT has the monthlies. Dollar wide, 50 cents. So like that. And then we got VRT. Okay. VRT on the monthly. Got some space. On the weekly, it's got a few dollars. On the daily, definitely got some room. On the 195 is the setup. They got earnings on Wednesday, so this will be a day trade for tomorrow. Let's see, Vertiv Holdings, LLC report on October 22nd, spread at 98 cents. Yes. So they got some news. They report. Let's see what VRT's got in terms of options. Oh, perfect. Yeah, I would day trade tomorrow. This VRT setup looks good. They got a 10-minute squeeze here. This is perfect. Um, 78-minute squeeze, and this 30-minute squeeze as well. Yeah, it's a nice chart, man. It's pretty. Honestly, because it's a day trade and because they have earnings on Wednesday, I might mess around and either grab these 195s or these 190s. I don't mind going a little bit further out of the money. How do you call it? VRT for a day trade looks good. All right, VST, last one here. Weekly. So the weekly looks good here on VST. Price is coming down right to the buy zone. Just got to let it come down about $5 more. Closed at 194.24. So this was the weekly. What about daily? VRT. Excuse me. So prices come down. All right. So let's see what happens here. VST. Let's see what VST's got. They got earnings on November 6th. VST. November 7th. 18 days away. 200s. 200s here, nice. If the 210s had a better spread, that wouldn't be a bad strike per se, but yeah, I think your best bet is trading this weekly chart. You got earnings November 6th, which gives you some time, 18 days. Would not be bad, these 200 calls. And yeah, I mean, that's really it. Happy trading, y'all.